The international organization BRICS, which consists of Brazil, Russia, India, China, and South Africa, is one of the most influential economic groupings in the world, although many people have never heard of it. Despite their unflattering moniker, the BRICS owned 26.7% of the Earth's land area, 41.5% of the world's population, and around 25% of the world's total GDP. That makes them bigger than the United States or the European Union by any measure, and their size will continue to grow with time. Welcome back to the Financial Fortune YouTube channel, your trusted source for expert analysis and insights into the ever-changing global economy. In today's video, we tackle a compelling question that has been on the minds of many investors and economists. Should we be concerned about BRICS? Brace yourself for a thought-provoking discussion as we delve into the significance of the BRICS countries in the world economy. Get ready to explore the opportunities and challenges posed by these emerging economic powerhouses and understand their potential impact on your financial future. Members of BRICS have declared their intent to increase commerce with one another. They have discussed the possibility of creating a unified currency, which would limit the West's influence over this important economic bloc. The political connection between these countries and the rest of the globe is obviously not the best. Thus, this trend might be reason for concern. China has made it obvious that it intends to invade Taiwan and bring it directly under control of the mainland, while Russia is now engaged in a conflict that has been unanimously vilified by the United States and its allies. One of the biggest deterrents for this sort of war over the past few decades has been steady economic cooperation. And if that doesn't work, most BRICS members are nuclear superpowers, so economic sanctions are a potent instrument that doesn't necessitate actually becoming involved in an armed battle. The United States, for example, stands to lose out on a lot of global trade if these countries are able to form a trading bloc or trading brick, and this could mean that one of the economic trade-offs of military aggression will disappear, and that there will be less standing in the way of these countries doing what they want. This is a worst-case scenario, but given the group's size and power, they may still significantly alter the global economy even if they merely use their connection to foster trade accords. One important fact to keep in mind regarding this group is that many of them don't particularly like one another. As a result, they provide an excellent case study into the dynamics of global economic collaboration. So what exactly is the BRICS group's economic endgame? Does it threaten nations who aren't part of this coalition? The BRICS economies were initially grouped as a matter of convenience by economists who wanted to talk about the major developing nations of the world. And the question of whether or not this group would be successful was added later. It wasn't an official group like NATO or the EU. It was only a shorthand technique to indicate important emerging markets. Economists frequently form such clusters. South Korea, Taiwan, Singapore, and Hong Kong are the founding members of the group of Asian nations known as the Tiger Nations because of their fast economic development. This is a common practice among economists. Although the US dollar is often referred to as the world's reserve currency, this designation is not based on any official regulations or agreements. Reserve economies routinely transact with currencies other than their own. The US dollar is simply the most widely used currency due to its convenience and widespread acceptance. This time, though, the BRICS countries saw this grouping and said, "Wow, sure, that's actually a fantastic idea. We should partner up." After being first mentioned in the early 2000s, the BRICS group finally held its first official summit in Russia in 2009, where leaders from the four countries met to discuss the global economic situation, reforming financial institutions, and how their countries could better cooperate in the future. This meeting occurred shortly after the 2008 global financial crisis. The need for a new global reserve currency that is stable and predictable was stated a month after the inaugural meeting by the BRIC nations. Although the United States dollar was not specifically named in their presentation, each country has previously voiced criticism of its preeminence. A year later, South Africa, another rapidly rising country, joined the club, and summits were held annually to discuss economic goals. The New Development Bank, often known as the BRICS Bank, was one of the most ambitious initiatives undertaken by the organization since its inception. The organization's mission is similar to that of the International Monetary Fund, to help developing nations increase their economic production and, in the long run, become productive members of the global trading community. The BRICS Bank is far more selective about which countries may join than the International Monetary Fund, or IMF, which includes almost every nation on Earth, with the exception of Cuba, North Korea, Monaco, the Vatican City, Liechtenstein, and Taiwan. The BRICS nations have discussed plans to expand their own network of underwater optical fiber cables to connect all member nations directly, because mainland China will not allow it. This isn't a huge problem for Russia, China, India, or even South Africa, due to their close proximity to the ocean. But for Brazil, which is on the other side of the world and has no direct ocean access unless one goes under the tip of South America, which is a massive undertaking. The nations have even advocated for the BRICS Games, which are similar to the Olympics and Commonwealth Games, but are exclusive to members of the BRICS group. The organization's overall goal is quite clear: to establish its own version of the Olympic Games, cable network, International Monetary Fund, and reserve currency. To the rest of the world, it seems like these countries are teaming up to form the avengers of bad human rights track records. It's troubling that more and more nations are looking for alternatives to established global operations. Additional participants are welcome to join the group. Formal membership applications have been submitted by the United Arab Emirates, Saudi Arabia, Iran, Egypt, Bahrain, Argentina, and Algeria. There is a large list of additional countries that have shown interest unofficially. The official applications from Iran, Algeria, and Argentina after Russia's invasion of Ukraine provide a clear statement that two economic camps have emerged globally. However, asking why they wish to do this is crucial for doing an objective examination. We'll take on the role of the devil's advocate and argue the other side of the global economic concerns we've been discussing. The obvious issue that all these changes raise in the context of decreasing reliance on the rest of the world, and especially the West, and perhaps more particularly the United States, is why. For what reason do these states choose to remain unaffected by the rest of the world? One can assume that they seek to protect themselves against Western economic penalties in case they decide to pursue less popular geopolitical ambitions. If these people can establish an intertribal trading network, they'll have access to the combined resources and labor force of a major economic bloc. So even if they are cut off from the rest of the world, it won't matter economically, since they have practically everything they need between themselves. Now, completely ignoring that conclusion is not only foolish, but also unfair. If the United States or Europe were dependent on the Chinese yuan as a reserve asset or a means of trade, they might seek an alternative. Russia's isolation from global payments networks served as a warning to many nations that they may lose access to their reserves if they took action that an unfriendly nation did not approve of. Now, of course, no country is going to invade another by accident, but if it can happen to Russia, there's no reason it couldn't happen to anyone else. So any responsible government would be wise to prepare for the worst. The revelation that the United States National Security Agency had been capturing data as it passed through the U.S. territory was a major impetus for projects like laying underwater cables directly linking all the BRICS countries. It's understandable that these nations would favor keeping their communications within their borders. The new development bank, which includes the BRICS nations plus Bangladesh, Egypt, the UAE, and Uruguay, is an alternative to the IMF. There is justifiable hostility toward these member nations and the IMF, but the new development bank is hardly groundbreaking. There are a plethora of such groups operating in different parts of the world, each serving a distinct population. The BRICS countries may appear to be a formidable economic bloc at first glance, but that's about all there is to it. China is a potentially hostile economic force since its output exceeds that of the other nations in this group by a factor of 2. There isn't much to worry about except China. The organization has been around for barely 14 years, yet has accomplished relatively little in that time. Despite being the de facto reserve currency for the group, China's RB only accounts for 2.7% of the world reserves, in a similar vein to Australia's and Canada's dollar reserves. The IMF reserves 3.4% of all currencies, which includes the other currencies in this category. There have been reports that the new currency would be backed by gold, and the nations have been talking about introducing it since 2009, but nothing has transpired. If they were to implement this new currency, however, it would likely make trading in their present currencies much more cumbersome and inflexible than it is now. The failure of the BRICS economies is a reflection of the group's general ineffectiveness, and not only of the BRICS specifically. At the time the name BRICS gained popularity, all the member nations were expanding economically and making strides in high-tech sectors. Most experts believe that by now, this cabal would have the world's economy firmly under its control. Most of the nations have slowed down greatly, but collectively they are still incredibly powerful, even without China, from a strictly economic point of view, merely because of the resources, manpower, technology, and as they own nuclear armament. Russia's economy has been sluggish for over a decade prior to these new sanctions, and it is expected to collapse much more as a result of the country's invasion of Ukraine. Brazil's economy has shrunk by about half in the previous decade, and the country's delayed recovery from the recession is being exacerbated by its persistent political problems. The outlook for these countries is not as bright as it once was. China, once an unstoppable economic juggernaut, is now confronting more and more issues as its economy develops, and South Africa has experienced essentially the same thing over the past decade. If these nations can't handle their own economies, they won't be able to control the global economy, even as it expands rapidly around them. Neither their individual efforts nor the group dynamic will be successful. None of the BRICS nations, let alone the prospective members of this organization, are exactly best friends with one another. The two major economies in this group, China and India, have been involved in direct military battles over territorial disputes. This is more of a convenient partnership than anything else. Both the smaller countries and the largest member were interested in taking part in global economic efforts because of the power and influence it would provide them. It has been the BRICS efforts that have been neglected on a fairly regular basis, as fresh programs have competed with them. We don't want to undervalue this group's potential influence on the world economy, but it's no more than a loose confederation that gets together once a year to talk about economic goals. The only reason it stands out among the dozens of other groups is because of its members. But it doesn't make it any less of a worrying trend. And that's the global corporation shattering apart. As the world gets more compartmentalized into smaller and smaller groups with shared interests, we will all face increasing difficulty. Access to the global market allowed nations like those in the BRICS group to rapidly build their economies. There is an almost perfect correlation between global commerce and world output. It's not easy to start from scratch and build an economy from the ground up. It's still challenging, but foreign investors may make a big difference by providing access to current technology and infrastructure, and acting as a buyer for the country's products, while the domestic market grows. As usual, I don't want to go over old ground, but the trend of nations becoming more self-sufficient for whatever reason will make this all much more difficult and long-term. And we've covered this process in a number of our recent films. Economic expansion throughout the world will suffer as a result. BRICS aren't the only ones advocating for this either. Redundancy frequently comes at the price of efficiency and opportunity, but in light of the global pandemic and rising trade tensions, most nations and businesses are striving to onshore and streamline supply chains whenever feasible. Because of its large population of relatively well-educated English speakers, India is one of the world's most promising countries right now. These individuals can provide high-quality offshore services in the universal language of business. Its future expansion and the expansion of economies that would have benefited from those services may be jeopardized if it were categorized as an organization directly antagonistic to some of its largest prospective consumers. While perfect international harmony is unrealistic, the previous century has seen unprecedented success in promoting peace through economic cooperation. Even if the people behind the effort to reverse the trend have the best of intentions, it is nevertheless cause for alarm. Building up the Economics Explained national rankings is next. They are not a unified country or even a closely knit economic union like the EU, but comparing their economy to others should give us some idea of how dangerous the BRICS actually are. The aggregate GDP of the BRICS is $25 trillion, making them more prosperous than both the European Union and the United States. While the group's combined production is only a perfect 10, it is still a respectable $7.5 trillion when China is excluded. Despite their great aggregate size, the typical citizen of a BRICS nation only generates $7,800 in production annually, much below the global average. This is because GDP is spread out over roughly half of the world's population. India, the most populous and the poorest member in the group, is mostly to blame for the average's low score of 4 out of 10. There is a lack of stability and confidence, neither within nor outside the clique. Russia is the target of several sanctions. There is a political and economic crisis in Brazil at the moment. China is engaged in a trade war, and India has joined the fray. They do benefit from being able to rely on one another for commerce and resources, but even so, they only receive a 5 out of 10. Strong expansion may once again be attributed to China with help from India. That makes up for the instability in the other economies in a big way. However, when considering the entire group, I must give them a 9. These nations' industrial sectors are quite robust. China is the world's factory. Russia and Brazil have abundant natural resources, and India employs more people than any other nation. In addition, South Africa is present. The ensemble deserves nothing less than a perfect score of 10 out of 10. As a whole, this gives the BRICS a mean score of 7.6 out of 10, indicating that on average, they perform better when used in tandem. As we conclude this insightful video, we are left with some crucial questions to ponder. Are the BRICS countries on a sustainable growth trajectory, or do they face challenges that could hinder their development? How will geopolitical dynamics and global economic trends influence the future of the BRICS nations? As investors, how can we best position ourselves to take advantage of the opportunities presented by these emerging markets while managing potential risks? The answers to these questions are complex and ever evolving, but staying informed and adaptable is key to navigating the opportunities and challenges presented by the BRICS countries. Stay tuned to the Financial Fortune channel for more in-depth analysis and expert perspectives on the global economy and its impact on your financial well-being. Remember, informed decision-making is your best ally in the dynamic world of finance. Until next time, may your financial endeavors be guided by wisdom and foresight.